Next is Sasol, and we're talking here about two different classes of equity. The Inzalo scheme, I'll think of it, the date in a minute, but it was probably about 2004, 2005. They set this thing up. Of course, there's been two tranches and each of them have rolled off. There are now two options to go in. The one has got the code SIPBEE. Those are the BEE ordinary shares, which will convert to Sasol ordinary shares at some point. And then there's the SOLBE1, which of course is a special purpose entity that gets special dividends, and that also converts, but in a different way at a different time. The SIPBEEs just went on to the JSE, and they have an aggregate market cap of about 444 million rand. The SOL BE ones are less liquid as far as I recall, but they've got a market value of 988 million rands. So you put those two together, you get that. The Inzalo scheme owns 10% of Sasol, and special purpose vehicle was created at that time. But again, a whole lot of debt in the structure. Okay, Craig, give us the quick version of these. Which one do you prefer? What are the time frames, etc.?
Yeah. Okay, so just one or two pointers. Inzalo owns 2.6%. The entire deal was 10%.
Aha.
Staff, the public, and certain partners.
Got some of the others. Okay.
Got some of the 10%. Inzalo 2.6, BE owns 0.4%.
Okay, quite small.
Okay. So you've got two schemes. One is what we call a discounted scheme. So a straightforward discount was applied to the Sasol price.
In terms of the subscription price when people went in?
Exactly, which was about 366 Rand in September 2008.
Yeah, okay, not 2004.
Okay. Not 2000. I wish, because then your 10 years would have been up by now. And then you had the funded scheme, which is Inzalo. That was heavily debt funded, about 88% debt funded at the time. So if we look at the discounted scheme, because that's quite simple and elegant, it's trading at a discount to Sasol. Currently at about a 23% discount to Sasol. So Sasol at 450, this thing's trading at about 340.
Okay.
Okay. There's a 1-for-1 conversion, so there's no debt structure. There's no.
Yeah. There we go. 347.
347. Yes. So
and the chart pattern looks somewhat similar to Sasol's. Takes a bit of a dive there in 2014, 2015 with the oil price and everything else.
Yeah, and it's been a bit of a sideways range for about a year now, just like the Sasol share price.
Yeah.
So that discount widens and narrows.
Yeah.
And if you're going to invest, that's the key variable to monitor.
Yeah.
Is what is the discount? 23% discount for a share, a deal that ends in 2018, it's 2.5 years. I think that's quite fair. But if you can get it at a deeper discount, well, it's just going to improve your returns.
Yeah. Switch to the other one, because we're going to be short on time.
Sasol Inzalo, that's the tricky one, because you've got quite a lot of debt. And some of that debt is variable debt. In fact, the bulk of the debt is variable. There's a variable interest rate that applies to it.
Okay.
So with being in a rising interest rate environment, you're going to have the cost of debt increasing quite significantly.
And again, that's the kind of scheme where at the end of the period, which is when, also 2018?
Also September 2018.
Then they're going to have to settle the outstanding debt, and then whatever's left by way of value ends up being converted, and that's why it's trading at 27 Rand, because there's a sense that maybe that gap is closed. So but is it looking too cheap by way of your calculations? Well,
at the moment, the net asset value is negative. So because of having so much debt on the balance sheet, and the Sasol share price having come down quite significantly. So this is a highly geared investment. So you can get massive price swings in a very short space of time, because your debt pile stays constant. And the value of the equity just goes up and down with the Sasol share price.
So clearly, if you were an oil bull and you thought Sasol was going to perform well, and if you were a Rand bear, because we know Sasol benefits from that, then you might. But again, it's one of those that has to be watched particularly carefully. It's not a no-brainer by any means.
Yes. So about 2 or 3 years ago, I switched from Inzalo to SOL BE, because the risk-return profile.
And both are on the JSE now, so similar thing. But you're saying you have to have a slightly different contract sign up when you get logged in for those.
That's right. I'd be hot on SOL BE, the discounted share.
Okay.
I'd be not hot on Inzalo, just because of the debt and the fact that we're in a rising interest rate environment. In their favour is the fact that we may have bottomed out in terms of the commodity.
Yeah. Okay, good.